In three, two, one.
Hello, everyone! Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. I'm having such a hard time with these silly videos and getting the camera angles and all that stuff correct. I don't know whether I've done a good job here today or not. Anyway, I've got the webcam on. I'm fighting with the computer. Got to update some hardware here, so trying to get the Canon digital camera going, and then we can do like the fancy schmancy video overlay. But for now, we're just throwing the webcam on there, and it's on the corner of the screen. So if I do happen to be like referencing something down in the lower left part of my screen, just bark at me. I'll keep the YouTube I can see the chat there. So just say, hey, can you move the screen over? Your ugly mug is covering up the image. So anyway, welcome to the Frivolity. This is our Sunday show. It's been an interesting past few days. Of course, I hope the message got out. I don't know whether it really does get out. I'm not very good at this social media stuff. But, man, I was pounding the table there, geez, I guess about 2 months ago, right? Get your together. Remember that? And, of course, Brian swears too much and always gets in trouble on social media and stuff. Get your act together. Get going. You could just feel the darn market coming in. You could just feel it. It was so obvious. And here we are. The market's going crazy. So I don't think we're done the frivolity, but this is actually pretty cliche. And if you're relatively new to this game, investing, whatever you want to call it. I actually have this really cool algorithm that we've built and put into place, and it's operating now. It's probably going to take some time for it to like sort of really fill out so you can really understand how it works. This, of course, is sort of a concept that's been banging around in the back of my head for like 20, 30 years. But the cliche goes, buy when it snows and sell when it goes. And almost always there's usually a fantastic buying opportunity somewhere in the month of like October. Usually it's right around Halloween. And I think if anything, that's probably why Halloween sort of exists. Is because in a weird sort of way it was kind of like the expression of all this sort of anxiety, just getting it out, right? In sort of a jovial way, right? Running around and dressed up in costumes and trying to scare people and boo and all that supernatural and all that. So what I often find in asset prices, especially speculating, is that things often hit sort of an anxiety peak right around there, the end of October. And also too, there's a ton of different factors. Point here is that the algorithm itself actually painted what I would consider a really, really good buy signal where things are dramatically oversold in both the medium and the short term. This happens to be in the stock market, and it painted the most beautiful buy signal. And of course, the stock market's just been grinding its way higher here for like the past 4 or 5 months now, based off of that bottom. Why do I mention this? Well, we actually recently just had a similar signal in crypto, where we had both the short term and the medium term get dramatically oversold, and the breadth indicator itself right down at the bottom end of the range getting ready to pivot. And guess what, folks? That damn thing pivoted hard. It was remarkable. I mean, frankly speaking, I didn't even expect to see the sort of severity of the move. It was quite dramatic. And interestingly enough, as the algorithms and stuff all start pointing back up, and then all of a sudden price just starts going crazy. And I think we got as high as like 25 or 26,000 or something crazy like that. Nope, that's an older one. Anyway, what's the point I'm trying to make about all this is I think we actually had a pretty significant pivot reference there in the market. And I think what we're doing now is what they kind of call climbing the wall of worry. That was the signal. From the algo was like way down here. Then we got some back and forth, hop off, hop back in. Are we heading back up? I don't know. We do have an interesting environment right now in that technically the adults, Wall Street, Joey Diamonds and all those people, they're away and they won't be back until Tuesday morning. So we still, you could make the argument basically the way the market would set itself up over the next 3 or 4 hours for the coming trading week. That probably won't be done until tomorrow. So we still got another day of kind of silliness. This happens to be a measured move off of the entire move. Rallies up into 27,000, I suppose, could happen. It almost looks to me like this is also a smaller bull A, B, C, D, which probably takes us up into this area, and we could probably look at the charts in a moment. And this is an interesting debate that I'm having right now because at any given point in time, oh, I see, look at that. No, yeah, okay. You can see that on YouTube. I got to worry about my silly picture. It's way too big. Make you all nice and small there. At any given point in time, there's 100 different ways to skin a cat. 100 different ways. Maybe even 1,000. And this is an interesting debate because probably for the past, I don't know, say 15 years or so, I've been trading this one particular setup that actually got me funded as a prop trader. It's that consistent and it's that profitable of a setup. This thing called the bot, where I enter at the 25 level. I can move my stop to scratch at 50% of the move. I can start locking in profits at 66% of the move. And I'm ultimately looking to actually exit as much of the position as I can. And in futures days, I would just exit the whole position at this and just call it a victory. And that's a very manual way of trading, and to help with relative anxiety, I often suggest to students that you want to sort of layer reasons to take a trade. So if you want to throw in things like indicators, indicator confirmation, signals from indicators that, hey, price is stronger than you think, that kind of talk, that's good. I mean, it helps with anxiety. There are other people, and I've responded in public media also too, on the sort of the inquiry. There are other people that are just like, hey, levels are levels are levels. I don't even really care. Just buy the 25 level, and I'm going to risk to whatever the bottom is, and just I'm going to take profits up here and live with the results. Whatever happens, happens. Actually, some of the best traders I've ever worked with are the people that have so much confidence in their skill set. They've worked with levels, things like Mountain Man, 61.8 fibs, that they're just to the point where, let's quit playing the games about, hey, I'm really good at predicting the market and, oh, I'm such a guru and all that, and look at my squiggly line. My squiggly line's better than your squiggly line, that kind of talk. The really, really, really good traders are like, there's the 25 level. I'm long. Why would not being long surprise you? That kind of talk. Stop against the lows. Take profits at A, B equals C, D price objectives. Do we go there in a straight line? I doubt it. And this morning, it's an interesting price action. I think a lot of people sort of lulled themselves into believing that this was just a one-way market, and all of a sudden all hell broke loose, and prices just all over the map here. I haven't actually looked and updated. If we haven't hit this 50% level, then technically the manual trader, the guy who's trading the bot, he's not really doing anything. Stop's still way down here. And you can move stop to scratch. And really what this is just simply, can the market go and take out that old high? And that's really, I guess you could argue, what this bet is. This bet is that the market will take out this high, and as a result, you can start thinking about measured moves. And you can see that basically this is a trading range, and 100% is nothing more than a range extension. In our level 1 education program, we'd call this the parking garage, right? That would be a 200% range extension of this range. So anyway, that's semantics. The point here is just even if we have not touched this 50% level, then really there's nothing really to do here. And there's a lot of noise. This algorithm, this has been a completely new adventure. I've been working away on building this thing called the Delacour Index, which the Delacour Index itself, if we use this, this happens to be a short-term U.S. Treasury ETF that we're tracking. This is actually the amalgamation of about 15 different technical signals off of 3 different time frames. So for almost like let's say like 45 different technical signals, buy, sell, and then I run moving averages off of the DI, and then the breadth is actually this image here. This is a summation of all of those signals. How many country funds are spitting out buy signals? How many country funds are spitting out sell signals? And then, of course, the moving averages off of those. So, very interesting. This has been an interesting project of mine because it sort of speaks to the idea that a rising tide lifts all boats and a sinking tide sinks all ships. So, if you have a rising sentiment in the broader space, then prices just generally rise. And it interestingly enough, it's less a conversation about things like Bitcoin as it is a conversation about crypto. This page that we have on the screen, this is basically that whole sort of package in a nutshell. And it's interesting how the top 5 crypto readings, because Bitcoin's been doing rather well recently, are all Bitcoin. But because our universe is so thick, it's all the various different types of Bitcoin. So this is Bitcoin versus Swiss francs, right? This is, what the hell we got here? This is Bitcoins versus the euro. That's the one thing I absolutely love about this platform. I mean, it is thick. This is Bitcoin versus the Turkish currency. I think that's what TRY is. Anyway. So, and then, oh, Jesus, this Filecoin drives me nuts. And interesting how this thing's so strongly rated on the platform right now. Adam, Mr. Oliveria de Hospital. I think that's what we'll call him from now on. Adam from Oliveria de Hospital. He first got me interested in this, and I was in it, and then I bailed, and then I never got back in off this damn double bottom here. Look at what it's done. Drive you crazy. Anyway, so this crypto platform, as I said there a moment ago, off of these tweets, we got a pretty darn significant event happen here in crypto recently. And you saw the way the market lifted off of, where the hell did I just have that? Off of that S&P 500 and the stock market buy signal last fall. It's the same thing. It's just a different part of the market. And you can see at that point, crypto was like, man, I'm not going to participate in this. And it really kind of didn't. But I guess just the point is that we just had this happen in crypto. And this is a pretty darn significant event. I think this probably carries us on into the spring. The only problem, of course, is do you go too far too fast? It's been a pretty darn big rally. Short term, it was interesting watching the crypto kids as we were waking up this morning. If it's one thing that you can learn from this feed that I think is very valuable is these kill zones. And as we come in, it's funny how this, the kill zones even happen during holiday sessions. You would have thought that, okay, well, these kill zones, they only are relevant when the Wall Street trading pits are open and the brokerage desk and the banks and all that, and it's all a scam, right? But no, it turns out this stuff actually works, through the weekend too. So, and sadly, what I think happened here this morning, and usually the rule about kill zones is you don't really want to trust the market about an hour and a half before the retail open and an hour and a half following the retail open. And really think of it psychologically. For us here in New York, right, thinking North America, the kill zone, where's the biggest chunk of the population? Well, it's along the eastern seaboard of North America. So what time do they wake up in the morning? And do they often make poor decisions when they first wake up in the morning? Maybe they're still thinking a little clouded. They're still thinking a little dreamy. Are they suspect to maybe FOMO emotional reactions or I'm wrecked reactions? And unfortunately, the answer is yes. So I think that's exactly what happened here this morning is, the market had a pretty nice head of steam. This is basically London. Ironically enough, this is the London kill zone. So you can see they had the market going down. So, what do they do through that kill zone? They turn it around and move it up. They get all the kids, of course, selling on the lows through that London kill zone, put in a bottom, and then have a big old honkin' rally. So market rallies into the North American Open. You can imagine there's probably a lot of people, of course, all the Asians that were up, they're all, just full of piss and vinegar. And I watched one guy, he was on air for, I think he said 6 hours when I woke up through my morning. And it was like literally 3 or 4 o'clock in the morning for him. And he was ordering McDonald's. And of course he was all worried as he was placing the order whether people would know where he is and come and steal his bitcoins and all that kind of stuff. I mean, typical crypto conspiracy sort of. And the guy, and it's beautiful listening to the crypto kids. They've got this language down cold. He was saying all the key terms like, oh, I got an ape in, and oh, wrecked, and oh, FOMO, and I mean, just I got my bags, and I mean, every key crypto phrase, this guy spoke it. And I wonder, where do you blur the lines between this next generation and the way they talk in this crypto speak? Because it seems like part of it's even spilling out into sort of regular everyday society. Anyway, so the point was that it was incredible watching them. They were all rah bullish, and I was even, you saw that tweet going, gee whiz, trying to stay long in this market, it's insane. And look at the volatility here. So we started out the morning, and I turned on my screen, and man, everything was up. And then I went, oh, Jesus, this is the damn kill zone. Are we actually going to be able to break out through the top here, or is this a trap? And boom! That's one hell of a nasty-looking trap, I tell you, by crackers. So, a little bit painful for the crypto kids here this morning. But the interesting thing is off of these bigger images I was showing you, not a hell of a lot of damage, if you will, is actually being done here, which I thought was interesting. Where the heck was that image I just put out? I guess this one here. This is a huge range. I mean, just massive. I mean, the price movement here is what, about $4,000 or $5,000 over the past month or so. So we're getting into some pretty big volatility. If anything, hey, welcome back to crypto. This is what's going to get everybody sucked in again. And by the time the end of this cycle comes, and that should be still working away on this document. I don't really, if anything, I plan to sort of publish this right around where I think the next market trough is going to be, which should be right around my show director's birthday, because it's, the reason why Bitcoin sells off is because of his birthday. And it's just that simple, right? Right.
No, it's not that simple. But we can maybe tell the public that on Sundays. I don't know.
My birthday then. Chris, we'll let him off the hook. It's actually my birthday that causes the market to crash. So, point being that this cycle should go on into December 2025. So, if you've missed this most recent run-up, don't get too wrapped up in the, oh my God, FOMO and all that. And if anything, the lesson that we saw here this morning is this is what happens when people get wrapped up in the FOMO, and this is looking at like a lower time frame basis. Like, listening to the kids there. But I heard a lot of that talk, and I think they're relatively intelligent, that one particular feed I was listening to. They are identifying a whole bunch of stories, and they're saying, well, I just really want to wait for a pullback down into key support before I can really start going and buying in earnest. And, the weird thing is that's exactly the same message that we were trying to convey to the public through our Wednesday show. Interesting how, actually, look at that. If anything, what they're doing is they're going after the stops right now. I don't even know if you can actually even trade this. That's an interesting sort of write-up. Let's go there. Then we'll go there. So let's see if a new M top comes in up top here. Still like the idea that there's your key support. But, clearly this topping pattern got broken. So if anything, we all go, whew. Jump back up above this trend line. I'm not quite sure where I've drawn that trend line. No, looks pretty arbitrary. Yeah, I just drew it off of those two lines. So I don't think that's too relevant right now. I guess what I'm worried about here is, do we have like bearish momentum divergences here? I think that was the main reason why I was thinking that was topping out, was that did not look very good at all. We did break the new highs though, so I suppose that's encouraging. But now probably, and I guess this gets a little dangerous, are we going to start to, oh no, we haven't yet. Okay, so really no signs on the weekly basis of any dips. A little suspicious about the volume here. That looks a little suspicious. Where was I going with that thought? Yeah, so I do like the idea that we're in a bull that should probably take us into probably 2025. And the image that I think I've shown you guys before, I'm pretty comfortable with it. It's probably easier to show you this here than pull up the chart elsewhere. Is maybe not. Oh, maybe I don't have it in here yet. What is it? It's the middle of February, so I still got a few months here to work away on this document. Anyway, there was a really cool, mind you, this will probably do the trick. I don't know if I can, oh, no, that didn't work. Yeah, fudge. All right, now I'm just wasting everybody's time. There is a, and this always drives people crazy. So here we go. You guys are gonna love this. We will go. Actually, here I think it's this one. Crypto cycles. Then it's always, which one is it? Okay, well, we'll load showed this one, but I have a feeling it's not this one. I will do. See, if I remember, I think this one was kind of interesting too. But yeah, we'll do that one. Okay, so we got this one. Yeah. Okay, so that's the one I don't want to show you. I always load that. Yeah, this is the one I want to show you. So, I don't see any. Nothing really looks out of the ordinary here. We're in the basing year. What exactly does this base look like? I think it's a mug's game to predict what it exactly is going to look like ahead of time. But I do like the idea that we should be pretty darn toppy here. You might even argue that we're probably back to things like 50% levels, probably like 30 G's or so by the time we get into the next halvening cycle. And then this peak should actually it would be interesting to figure out how we do that. I suppose well, just for fun, something along like there. Over there. Yeah, it's gonna look something like that. Where is that? And I've been hearing a number of people actually starting to talk about $1 million Bitcoin. Like people in earnest are actually saying, yeah, actually $1 million is not unrealistic. I don't know if it plays out this way or not, but anyway, 25, 26. This is where I think the end of this coming bull should come in. I'm not going to share this document just yet. If you are part of the site and you'd like to help me build it, you can see Francis here has been working away. I think Eddie also was posting a note or two. We also have a club. Of course, getting the club together. And actually, we should probably have Eddie's a link to Eddie's spreadsheet here. Eddie, you got that spreadsheet link handy? I can throw it in here. Really, the only people that I want to have access to this document right now are the people... hey, there you go. Thank you, Chris. Are the people who are actually helping me build this document yet. I'll just call this... something along those lines. So if you're part of the site and you would like to participate in building this, because keep in mind, once it's done, then actually I'd like to give this document out, and really this is kind of what I'm thinking here, although fucking miss that goddamn Phil. Pissed me off. I've been giving this away for free, and there's a landing page and the whole darn thing. So it's still a work in progress. And I think my ultimate goal is I'd like to have this produced for May. I like that idea. I think that there should be a seasonal trough in the market, and then when we sort of produce it and have it all ready to go, there's another big component to this, which is if you need to learn how to be a little old lady, I have a whole little old lady educational plan that'd just be specifically for how do you start acquiring these altcoins. How do you manage the positions? Where do you manage the positions? All that kind of fun stuff. I don't want to give the link away to the where the hell are we? Over here. There we are. To the document just yet. Probably look for it in the next couple months. And I really don't think it's a good idea to get too crazy uber bull just yet. And if anything, the way that I'm looking at the market right now is think Archcoin. So if any of you know what Archcoin is, know the historical context of Archcoin, If you were in crypto through Archcoin, then you kind of understand the part of the cycle that I think we're in right now. I think you could probably also say too, I think this is reminiscent of library credits when it sort of just got going, and of course that was way before the whole sort of DeFi craziness kicked in. So anyway, work in progress, and the point being that I can't remember what the hell the point was. Oh yeah, okay, well let's get back to the Bitcoin analysis. Sorry, I got off on a tangent there. I look forward to that in the days and weeks and months ahead. Okay, so current price action. Is this the chart I had up? Oh, this is total. Yeah, I was looking at the Bitcoin. I think off of here. Yeah, there we go. So we had sort of New York kill zone shenanigans. That's pretty normal. It's kind of sad, but it's pretty normal. I think a lot of kids that just were caught sleeping at the switch got emotionally triggered. It was interesting to watch the fallout happen. But what I wanted to show you is if we sort of disregard this lower time frame analysis, keep in mind we're looking at like a 3-minute chart here. We zoom out to something like, I don't know, an hour and a half chart. There is that higher time frame chart that you saw there on Twitter. So what's actually happened here? Interesting how we did not have move stop to scratch level hit here yet. How frustrating. But that's a trader's life. But anyway, interesting sort of anecdote. I believe, and of course hindsight's always 20/20, so when you look backwards you go, oh gee whiz, look at that awesome level. But I think this is probably a really good anecdote of sort of how I would have wanted to sort of approach this push higher here. There is the bot level, so I could actually justify being long from 24,305 area. And this happens to be on Binance versus Tether. I mean, I suppose you can also look at the stamp chart. And oh, by the way, I mean, this the funny thing is I did this actually versus Tether. So this actually should be, and I think I did this before when I post all these algorithm trades on the site. That's actually for there, but anyway, we'll put that on the side for now. So bot wise, one low, two lows. This was an interesting little battle here. Nice little doji right there, then a reversal, big pop through that level, then came screaming right back down to finish the bar as basically a shooting star. Probably cleaned out a lot of stops. I bet you there was a bunch of guys who were short here. And on that level, that's what that big spike there is all those stop loss orders. Ching, 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 ching. As soon as the stop loss orders were done, there was no sort of retail buying on the other side of it. So the market just basically went right back to where it started. Then, next hour and a half, these are my funny little Tesla time charts. We can probably just change that to an hourly chart so you can see it. There it is. We finished, beep, opened up, and then started trading away through. I really wouldn't have a problem if somebody had said, Brian, I'm feeling uppy, and that crazy algo, gee whiz, I hate fighting against that damn thing. It actually rolled over here and went bear, so I actually got out of the long that it had me in off of the bottom. And then it started to hum and on. It just wouldn't break, and then it popped up through here. So I actually don't really have a problem, people who actually said they went long off of this bullish market structure, off of this trend line. That's not a terrible trade idea. And like I said, this is what I would call front running the bot. But anyway, so there's an interesting level. And I think in the tweets that I put out, I said, this would be an interesting comparison to see how the algorithm does versus Stone Age manual. I get my charts in the mail. Bot level trades. Yeah, we'll see what happens. Algo looks like this down move was a bit of a head fake. So Algo actually got happier again. And you often see this in these kind of algorithmic movements. This is what got me out. It was a big slam down in the short term, and then literally the next day, boom, we were right back in the bull. So interestingly enough, even the whole crypto verse even gave that head fake move, and it happens. I'm fully prepared to ride with those kind of punches, and if it means that I have to forego $1,000 or so because of the slippage, getting out here then getting right back in here, well, so be it. That's trader's life. And of course, if that rolls back over, if this thing rolls over and momentum breaks and the whole market starts rolling over in earnest, then I'll get out. Just follow the chalk marks. In fact, I just started this trading plan because the algo was sort of officially up and running end of December. So you can see here was an example of bought down here, sold here, all that kind of talk. So I think I started this here in sort of the middle of December. So just taking these signals, bought, sold, bought, sold, bought, sold, bought. Oops, actually I'm glad that didn't happen. Just FYI, we'll be running this on the site, and I think I've told lots of people about this in the past. One of the trading plans, and you can see constantly working with trading plans. Probably got like 10 different trading plans all running right now. But anyway, here is the fun little DI Bitcoin trading plan that we started up and running in December. And actually, I got to be pretty happy. The silly little system's up about 49% on our money so far. But what the hell, Bitcoin itself has jumped up about that much. So really, that shouldn't surprise. But anyway, and I publish this on the site, every single trade. What does the actual chart trade look like? So everything from the indicator to the actual entry, and then the actual trade itself on Binance, wherever we're doing the actual trade. So I am publishing and posting this, of course, in Brian's Big Fat Bot trading room on Rocket Chat. FYI, though, we will be moving to Discord here relatively shortly. So I don't know whether Stuart actually has like a time window that he's working off of, but we should probably have like banners and stuff up on the site. We've been kicking around that idea in the sort of group marketing room to just give you a heads up. We are making that transition in the not too distant future, so whatever the room looks like then, you can find all this there if you happen to be a site member. All right, so the point of all of that is I happen to have 2 trading plans that I'm running here on Bitcoin right now. The first is, of course, bots, and I love bots. In fact, I'm actually even thinking about getting in on this Ethereum bot. So you can see that little guy's just working away. It's fascinating to see the battle right off this trend line. Wicked battle here. So how this resolves through the day, you might find that Brian's telling you he went and bought Ethereum there at $1,700 trading this bot. Yeah, that could very easily be the case. And I am running the algo on this. I'm only running the algo off of the BTC top 30 off of the Bitcoin. So we might even find that this actually doesn't even work off of Bitcoin. We ran it all last year, and we ran it on a number of different markets, and the results were pretty impressive. And as I said, we're already up 50% on the year anyway, so it's not like we're basically playing with the market's money now as it is. So very pleased with the direction all this is going. And as you can see, whether it be bots or whether it be algos, right now I am bullish. And as long as we just keep painting higher highs and higher lows, and keep in mind, really, I might even make the argument that the last key low is this candle's low, and that's 24.051. So this recent low here, 24.277, is that's $200 off of that previous low, eh? So we're still painting higher highs and higher lows. So anyway, we'll see what happens. Only time will tell. So that's sort of my Bitcoin update. If you wanted any kind of sort of update on that. Another trading plan I'm running congruently, I guess, is we actually not last cycle. Last cycle I kind of took the cycle off, but 2 cycles ago, when I first got involved in this space, we had a fun little challenge. And actually, this is really cool how it's coming along. I actually did a challenge with the Coinigy guys. In one of the first videos, we kind of jokingly said, ha 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 ha. And I said, I'll take $500, one of the students' tuition from that particular year we started the school program. And I'll just put it into an altcoin account, and I'll run it up to 100 G's. And everybody went, oh yeah, sure, yeah. So this was the end of that saga, where I bought 1.25 Bitcoins, and it was, I think Bitcoin was like $460 at the time. And basically declared victory when we hit that 100,000 mark. So I think this thing actually, even now, like I know we took another 50 out just from that silly Doge. Stewart, I think he ended up liquidating the rest of it at about 175. Plus we had the original 100, so that's 275, 325,000. Not bad from $500. So anyway, that's now history. But let's do it again. So that's a big part of that document that I just was making reference to. This and just give you a quick shot. We've gotten the plan up and running. And I actually have about a dozen or so names. I mean, this is some of the other characters in the group. And look at that. There's even other people who are adding. There's Stewart. Hey, Nicholas. Welcome. Looks like Nicholas. And here's Brian, big fat bot. And actually, this was in French lady's kitchen. She had a picture of a chicken there, so I thought it was only appropriate that I got a picture with him. But you can see I'm already up to about a dozen names, and these things are all moving, rocking and rolling. There's a couple names I'm really pissed off. Like you notice that that Filecoin isn't in here because I never got into it, or I was in it and then I got chicken shit and got out, but then I never got back in. What a doofus! But anyway, that's a trader's life. But anyway, so I'm up to about a dozen names so far, and I'll just keep recycling. And I thought it was interesting, the little ones, kind of a different conversation than Bitcoin and all that. But if we actually here, probably let's go off of, say, this chart. The little ones, gee whiz. There was one of these robot names. Oh, look at that. It's still up on the day. Look at that chart. And I even tweeted out the other day. I was like, if I was one of these guys and I was running one of these sort of, buy my course, I know how to trade. So do what I tell you to do and you'll make money from trading. I mean, this is basically, you could teach a whole damn course off of just this one chart right here. It's just so absolutely perfect. And I noticed it went zipping up again here today. Now this one's kind of a funny one because am I an investor for the little old lady plan? And I want to buy French lady's country. What would you call that? It had 17 bedrooms spread out over like 2 or 3 acres. It was weird. It was sort of an Airbnb, but it was kind of a mix of cottages. I don't know. It was really interesting. It would be perfect.
Cottage.
Huh?
I said a Portuguese cottage is what I would call it.
Portuguese cottage. Yeah, even remember the cottage that you liked and Chris changed, man, that was damn cool. Anyway, so the point being that, what's that?
Chris Chateau, is that what you're referring to?
yeah, I don't know. It was a cool place. But anyway, price tag was a little bit high for me personally. So got to go make some money so I can just buy this darn thing outright. And, it's stuff like this. Or am I Mr. Trader? And do I, just... I'm here to make money from trading. Quit screwing around. and I don't know. I'm kind of conflicted right now, to be perfectly honest with you. Because this one, and actually I thought I had all the levels drawn up. Oh yeah, here it is here. So this one, I like the idea of just owning this darn thing. Whoops, what happened there? Actually, I might even have the levels on here. Let's see what happens. Oh, no. Oh, fudge. That didn't work. All right. Let's go back to where I was. All right. So this one... how did I do this? Yeah. Okay, so number one, hopefully you can see, big fat weekly W's. Is this the kind of thing where you can make some money? And I mean, it's just ridiculous. It really is. Like... I hope now you guys, and the thing is that people, please listen to me. We're just getting started. This is nothing. We haven't even really got the bull market going yet. So if you think that there was money made here over the past month or two, man, you ain't seen nothing yet. Hey, and this is the great part about being in this particular space. Like if you're in venture capital and you can sneak your way in off of the bottoms of these ranges, the money is ridiculous. Is a good example. Sjord got us all jazzed about Luna when it was like coming right out of the gate at like 40, 50 cents a coin. And the darn thing went all the way up to $100 and some odd before the whole fucking thing fell apart because people's egos got a little too big for their britches. Anyway, we won't get into that today. But the point is that if you can get in at the bottom of these things, 100Xs are really not unrealistic. Life-changing events, all that kind of talk. So, I mean, as I said in the tweet, I mean, if I was going to teach a course on when to actually invest in this stuff, I mean, for heaven's sakes, take a screenshot of that, people. It is now. Now, you want your chart to look like this. It's just that simple. Do people actually buy? I don't know. Anyway, I mean, Jesus, there's so much money to be made here. So, do we look to sell halves on Bombs and ride the rest up? Or sell half on double, whatever? Or are we a gnarly trader and, hey, we're just here to make money from trading, right? And so, like I said, I'm a little conflicted by this one. And if anything, what will end up happening is the exact opposite of whatever strategy I decide to employ. That's Murphy's Law, right? So, bot setup. I'm here to make money from trading. This is a prop firm. You got to make Nebraska money or get the fuck out, right? And all that kind of talk. So you can see how this trade just is so perfect. Look how that 25 level set up so politely, right? This is, remember I showed you earlier on the Bitcoin chart. This is exactly the same thing. And notice, look how that bought target, it ran up into that level. And I was looking at that this morning and going, okay, I want to buy French lady chateaus and I need to do my 500 into 100,000 or whatever number. Keep in mind, we're starting now with 10,000. So theoretically, the stopping point should be, what is that? 500 to 5,000 would be 10. So 20 times. So I don't know. Let's say $2 or $3 million, something like that. That should be my ultimate objective, and that should be enough to buy all the French lady places I need to buy for the rest of my life. It's just a question of just executing the plan. And I think I've said this plenty. Now is the time to execute the plan. Just get to work. So anyway, and that's a message to myself as well as you. Or, should I have just rung the register here because I'm a badass trader and just walked away and booked the 3-to-1 risk reward? Of course, it's never an easy answer any way you look at it. So I've erred on the side of shooting for my Bomb to sell half on doubles. And frankly speaking, if I could get a pullback against the bottom end of the range, I think I'd be more than happy to buy some more. The only problem is, this thing can only come down so often. We've already been down here once, twice, 3 times, 4 times. You can see they tried 5, and the market just said, look, I'm done going down. I want to go up now. And now it's starting to crank. So this will be a fun one to see what happens over time. My hunch is, my hunch is, believe it or not, call me crazy. Many people do, so you wouldn't be alone. My hunch is, wicks and tails like to be eaten. Candle body highs or trade location. I really like this $5-6 area. I think that's totally doable over time. And, as this sort of move gets going and we get into sort of the fall of 2025, I fully expect names like this to be blasting through these old highs. And, probably kind of like that, Luna. If we go through this high, you could probably think of that as a range extension. So we just want to replicate that to the upside. So basically that's like the better part of $20. So the upside objective should probably be 40. And then you could probably do fog and bombs off of this range. And if that's the case, then 2.618 would probably be something like $60, $70. Wouldn't surprise me one bit. So, do you have your crap together? Are you ready to own this market? And one day, I tell you, one thing that happens to a lot of people, and if anything, learn from Brian. Sometimes you zig when you should have zagged. And this is sort of why I don't like to sort of summarily walk away from any position. This is a name I want to be in. Now, it's still, because it broke down here heading into the tax loss selling window into the end of the year, it still hasn't actually officially started to trend higher. What I'm hoping for now on this thing, I got out when it broke down through here, and I was like, oh, that was a smart move. Good idea to get out. And then now, look at me. Oh, way to go, Brian, you doofus. But what this kind of looks to me like is, and I'm seeing this a lot in the market, is sort of down, up, somewhere up in that area, down, and maybe we do something like that. So there is that guy who's responsible for destroying every cryptocurrency rally ever, his birthday. The bastard is like May 11th. Can you believe it? What loser would be born on May 11th? Gee whiz. Of course, speaking about me, not anybody else, that's my birthday. Anyway, typical pullback into my birthday would carve out some sort of head and shoulders. So what I really want to do here is, at this point, I can't chase that. And I'm pissed off that I missed this thing. But way to go, Adam. Hopefully you made tons of money on this. I want to hunt my reload zones. So once again, I will be watching like a hawk coming down into this level here. And really, if this is actually an inverted head and shoulders, then we should hold whatever low this is right here. So actually, interesting how that's right in between that. And there's a lot of names that look exactly like this right now. So don't chase. You chase, you're going to get yourself into trouble, folks. Really, you will. And, today's price action in Bitcoin, what it did there sort of caught all the kids who were just all insanely uber bullish. When I woke up this morning, they all got sort of bitch slapped. And I think it was just because the market went a little too far too fast. So, names that I'm in. And I got a bunch of them on the books. I love this little KMD. Look at that beautiful little W right against those previous lows. Nothing to be done on names like this. I'm long, just long and stay strong. This EOS has performed really nicely. Haven't given us the trending signals. Again, think this bull market is still very, very early, folks. We're still trying to find a bottom, and don't be surprised if we actually have to come down into that May period. That Gensler guy, he's all going crazy about regulation. It might be something like that. Hell, Vlad, he might light off a nuclear bomb somewhere in the world. That sure would rock things. So you don't get into the business of predicting the future. Just don't do it. It's impossible to do. What I would just simply say is, hopefully what you've seen here, and it might be something like, okay, I've got my list of DeFi names, right? So these are all the names that Sjord is loading up in DeFi land. I've got my names like Matic, that Beamish guy says his system said that Matic was a buy back here. So I've been hunting longs and now I'm long and just, enjoy the ride. Maybe it's something like, I'm not going to say the name, but gee whiz, look at that damn chart. That looks ridiculous. Maybe it's the artificial intelligence in crypto, although artificial intelligence in crypto doesn't really make any sense. Point here, I think, is that kind of like what you see in this document that we're trying to put together here, what I think would be really wise is to try and spread the jelly. Don't just have all your money in just one name. Don't have all your money in just one particular sector. Don't have it all tied up in sort of like the tier 1 or the tier 2, or, don't have all your money tied up in like storage coins or, you know how this goes, NFT. But diversify, spread the jelly. There's nothing wrong with that whatsoever. So... all right, so what's this person say? I made 800K in crypto from 1,500 without any TA knowledge. Well, good for you. And I hope you held on to a bunch of it, because usually what ends up happening in bull markets is everybody gets rich. And, oh, look at it, so easy, and look how big my bank accounts are. And all of a sudden, boom, 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 boom. And it's gone. Oh, damn, I was rich. Anyway, so back to my point here, and congratulations, I keep on keeping on. And like he says, did the TLI level 1 recently and can't even imagine gains on the next bull market. Well, that's good to hear. So point here is try and diversify. Try and have your money spread out. Don't hold all your eggs in one basket. Nothing changes in this. You know what? Ultimately, and there should be, and I'm not quite sure why, but if anything, it should be part of this conversation, is there... and I know, Sharktoshi, if you're watching this, I know that you've done this before, but we need that picture of the entire crypto verse. I think it's like verse. And all the different sectors. And what's interesting about this is that, even from cycle to cycle to cycle, we could probably go and look at one from like 5-10 years ago and we go, oh, remember that funny name? Oh, you remember that one? Remember that one? People were going to be living in their Mobies, right? And all that. And then the last cycle, how it's changed that one. And I would imagine this cycle, there's a whole new food chain, right? I don't know what would be the term. Crypto universe. I don't know if it would. Can you do that on Twitter? That doesn't really work, does it? Okay, there you go. That's interesting. No, that's not exactly what I was thinking about. Maybe. Maybe we can get like, yeah, this is what I was thinking. You guys remember this from before? So notice how there's a whole bunch of different tiers, then different applications. So actually, this is exactly what I was thinking. And there's been a few of these. So I guess that's that one. Anyway, so actually I wouldn't mind filling out this document with this kind of stuff too. So that's one. I know, Sharktoshi, you've got like a really cool one. This one's really, really small. Excuse me. Gesundheit. What time is it? All right, it's noon. Okay, hopefully I gave you a few things to think about in the cryptoverse. Don't chase. A couple names that we're interested in. Anything that you see that's blue is a name that I am in. Some of these names have already jumped up quite a bit, though, so please don't chase. Draw your reload zones. Do your own due diligence. You know how the story goes. Can't chase something like that. This guy here can't chase. They're all gone, right? If you want to buy, fine. Get your reload zones and your stink bids working. But for heaven's sakes, don't chase. And unfortunately, some of these, I missed the boat, and now I have to sit and wait patiently. So I've given you a bunch of names that I'm interested in. Anything that you see that has a blue dot by, it means that I bought. Anything that you see as a green dot means that I'm working stink bids. There are names that I'm bidding on. And I will be constantly buying. Over this next year, buying. The only time I'm going to be selling is if we happen to see banging out doubles or, 2.618s, that kind of stuff. Okay, so that's sort of what I'm doing in the market. Now let's head on over. I don't know whether there are even any questions posted or not, but that's the point of today's broadcast. So we'll just do a little Q&A with you guys. Feel free while I'm chatting away here if you want to add a question. Yeah, looks like it's pretty quiet here. What day is today? Today is the 19th. Doesn't even look like any new questions were asked. 17th? I think I remember answering this last week, didn't we? I seem to recall. Somebody asked me to look at CHZ, and I put the chart up. Okay. I don't think I've seen this question. Maybe we'll... I remember I did see this question last time. I don't think I answered it. I think I sort of saw something when you mentioned Python, and I went down a rabbit hole of when I used to be on LinkedIn and people looking for Python and C++ coders and stuff. So this has been around quite a while. In fact, I first learned how to program in Pascal. So anybody who's watching on YouTube, you want a reference of how long I've been around. When was the last time people actually actively used Pascal? And it was on a mainframe computer. What the hell's that? So attack this question again. Could you discuss the rise of tech and AI and all these machine learning being impressively stable with the use of Python and finance? What do you see the chances of retail shops being able to sustain profitability still doing things manually versus the computers and algos running exponentially faster? I think the first thing I would say is computer programs are only as good as the actual programmers, and those programmers are humans. So really, you say that the computers are taking over, but really they're just a reflection of humans. And I've seen a lot of algos, man. I remember one time a few years ago, a guy wrote a bot, and I think it was one of the Z coins, and when it went public, the bot went absolutely crazy and it bought something like 3,000 Bitcoins. Like absolutely unheard of prices. And he I never heard from him after that, so I don't know what happened to him. So, if anything, what I find a bit scary, and I think I remember saying this, is what I'm worried about with like ChatGPT and stuff like that is people are getting lulled into thinking that their algos are bulletproof. Then you get some sort of black swan event nobody was expecting, like maybe the internet goes down or something like that, and all of a sudden, there's a really cool YouTube video that I used to share of there was a day in like the middle of March in like 2011 or something where the stock market just went into free fall because it turns out some guy was just operating an HFT program, and he just caught the market at the exact moment with the momentum pointing in the right direction, and he just kept hitting the bid with his algo and just kept hitting the bid, and that just literally caused the market to actually crash. So what do all the people that bought long bots into the face of that rally, kind of like exactly what we saw there on Bitcoin this morning. This is, when I went into this chat room, and there was a guy who was just running I can't even remember. I don't want to make reference because I don't want them to start saying copyrights and all that kind of stuff. But somebody had posted in the lounge, they were all watching this Bitcoin price chart, and it was just like a circle jerk, we're all going to get rich kind of shit as the market was moving higher and higher and higher this morning. This rally here, and then all of a sudden out of nowhere the floor just fell out of the market, fell out of the price. So and what I often find, and I actually teach this in our level 3 program, is when we start coming into levels on things like the S&P 500 futures, you can actually start to see the algos start to come to life. You can literally see the behavior in the DOM itself actually changes. And there's no way, humans can't operate fast enough. When you see the way the DOM starts to move, it is purely computer programmed, computer driven. It just moves that fast. And then what is even more interesting is you actually start to see, and the only way you see this is if you study the damn DOM 24/7 every single day of the week, like I used to when I was at the prop firm. You actually see algos start to come to life that feed off of other algos. Because keep in mind, all of these algos are written by humans. So there was some human that said, there's this guy, Mountain Man, and, these algos just buy that 61 point fib every time. So if I know that these algos, they typically have a risk window of 20 ticks, and I know that they're going to buy 61.8s, then that means that at 61.8s, if I can drive the market down 21 ticks beyond that level, I can start tripping up those bots' stop loss orders. So you get this feeding frenzy where you actually get bots fighting with other bots. The only way you actually can believe it is if you actually see it happening. And in the level 3 program, I happen to have recorded a pit session from crude oil 1 million years ago. And you can actually see as we come into a mountain man level, the entire behavior of the DOM completely changes. So I think they're already here. It's already happened. This is old news. This is not. If anything, we used to always say, and it's a cool tell, that if you ever see slang or you see phrases and stuff that the kids are starting to use on things like playgrounds in junior high school and like grade school and stuff, then that fad is old. And the fact that things like the public now are being informed about things like ChatGPT and building algos, and the public is at the point where then that means that this technology is actually it's last yesterday's news. There's something even better and bigger that's going on underneath the surface that we probably don't even know about. Like I said, like algos actually hunting other algos. Think of, like the Matrix, right? With the German guy, or I think he was German or Swiss or whatever the hell he was. And his army of minions and how they were all out to get Neo, right? He was a computer program living inside the Matrix, and he would go and eat other computer programs. So that's what I kind of think what's happening now. Then the question ultimately is what is Brian's objective here in this education program? And in a weird sort of way, what I'm trying to do is I'm trying to teach you the way that institutional players approach the market and where institutional players would run algos. So, for example, this is the bot setup. I have to see 3 higher lows, and that's market structured. There's no reason why you couldn't have an algorithm that actually has this all mapped out. And it's a trade that the algorithm's actually in. No way of knowing whether this trade's going to actually work or not. The key here is that, over time, vetted the setups. Setups work about 60-70% of the time, somewhere in that neighborhood. And in this particular case, if this thing is right, it pays you $3, versus if it's wrong, you lose $1. That's the secret to winning money at this game, folks. A lot of people just don't get that. But anyway, that's here nor there. So point here is, this could very easily be a bot. There could be an algorithm running this. And that's what I kind of want. That's the whole point of this education program, especially with things like the 3-step process where we want to hunt trade location. All of this, does it not make sense that you could have algorithms that basically say, when, and hell, you can do it on Bitcoin for that matter. When Bitcoin price gets to, and you've heard me talk about how Simon Dixon tells people, screw the algos, you can be an algo trader yourself. If the market, and really I would even just use this as 0 line to make it really simple. I'll just leave it as is. Point here is, when the market gets down, you've heard Brian talk lots about how you're going to look back over time and you're going to see the damn market bottoms off that 78.6. I mean, it's ridiculous how often it is. Could you not build an algorithm that just keeps an eye on Bitcoin price on a daily chart, and whenever Bitcoin price gets below 78.6 of its previous cycle range, you just go and buy? Could easily do that. Boom, now all of a sudden you are an algo trader. I like the idea of teaching people, okay, at this point we want to look at our indicators, and keep in mind the whole reason why I do this is to try and just make sure your anxiety level is as low as possible. Can I see signs that maybe price is actually stronger than what price would lead you to believe? That whole bullish divergence kind of concept. And then finally, I want to frame the trade. So can I find things like W's, where you're just going to buy the middle part of the W? You're going to risk to a break of the bottom of the W. And generally speaking, 60-70% of the time, kind of like what you just saw here. If you buy that middle part of the W, you're going to risk to a break of the bottom of the W. You have no idea what's going to happen. Could you algorithmize this? And you're going to pay yourself when this thing hits a 2-to-1 profit objective? Could that be an algorithm trade? Well, we talked about how, reload zones. Could you set a condition for your algorithm to buy 78.6s? Could you set the condition on your algorithm? You have to see, W's in indicators. You have to see maybe Willie Stupid. Do you have to see W's in price? And then when the market hits $2 paid versus $1 risk taken, you pay yourself and ring the register. Maybe you sell half of it based on your computer program, put your stop to scratch on the remaining, and you ride the other half of this position up to $1 million a coin. Could all be completely algorithmized. And ironically enough, that's my job. In a weird sort of way, I know it kind of sounds bizarre, but to be a really good trader, you literally have to create an if-then-else statement for your trading. That's an algo. And really, that's my second rule of investing. Actually, it's my first rule. You have to build an algorithm where you know that if you do something, that the chances of a positive outcome are greater than, say, 60%. And ideally, I think we can get up into the 66% number. And if you do things like, I trade W's, and I'm going to risk to a break of the bottom of the W, and I'm going to force myself to stay in the trade till either the bottom of the W is broken or the 2-to-1 level is hit and I ring the register. Could you teach a computer program to do exactly that? Absolutely. has been that sort of my goal working with Sjord over the past 8 years, or I guess, 6, 7 years. Absolutely. He's actually got the computer to the point where it actually can see these W's now, and it can plot on the actual chart by the W, take profits at 2 to 1, stop at break even. But for the past couple months, we've been, of course, completely swamped with getting the front of this damn rocket ship and moving to Discord. Hopefully we can put this darn crazy chat stuff to bed and get back to building algos and trading bots. That's the whole reason why Stuart came to work with us to begin with. So, anyway, so to answer your question, I would actually ideally like to turn you all into computers. And if you want to algorithmize this, awesome. Go for it. I'm not going to say it's easy. Not going to say it's easy one bit. This has been incredibly steep mountain to climb. But I think Stuart's getting pretty darn close. So keep your eyes peeled. Within the next year or so, I'm running manually just the simple DI breadth algo myself, just manually doing it. The system updates at 9:30 every evening, and I think that's just because that's the center of the universe, Breda, when where the servers are and all that. So I'm taking the signals at about 9:30 every evening when they come in, Pacific time, my time. But I would imagine it actually, Stuart already has it, so it's not really like it's not happening. There are the bread signals, so you can see I'm just basically taking the signals as they come in, and they're being reported on the system. So could we get this to the point where the computer actually does the trade as opposed to me manually doing all of these trades right now? Absolutely. There's no real reason to. We'll get there. We just slowly but surely. So whether it be things like the education program in a weird sort of way is actually trying to design, it's designed to stop you. Let's try. There's a cliffhanger. What's the program designed to do? Hit the like button, subscribe, ring our bell for notifications, all that kind of stuff. Could you please? Love you for it. Thank you very much. The program is designed to stop you from making emotional decisions in the market. That's the number one goal of the whole program, is to stop you from being the human emotional creature that you are. And it's not easy. Could you, once you've learned the process, could you algorithmize all of this and become a bot yourself? Well, ultimately, that's actually the goal. The goal of this program is to turn you into an institutional player. It's to turn you into everything that you guys hate about the 1%. Is to actually turn you into the 1%. And what's super cool, I'll tell you, is there are a few people that got involved with me back in the 2014-15 market, and they are now part of the 1%, and they are very comfortable there. Thank you very much. No reason why each and every one of you can't transition yourself into the 1%. So let me see on the YouTube page. Do you want to be the 1%? Would you like to change your life? Do you want to go and make all that crazy ass money that is going to vault you into 1% status? That's the whole point of this exercise. So let me, in fact, when I used to talk publicly about trading the bot, I mean, keep in mind, I have no idea what's going to happen here. And don't kid me. None of you know what's going to happen here. You don't know the future. All you got to do is you just got to build your reasons of why you're going to act, and then you have to act. It's just simple as that. But half of my job here is to stop you from making emotional decisions. And usually that emotional decision thing is all about FOMO. And then, of course, chasing the crowd and stuff. And half of my job is to, whoa, don't chase, don't chase, don't chase, don't chase. And a properly run algo bot does not chase. In fact, they probably even sell against highs and buy against lows, which is very difficult for the public to do. All right, well, anyway, there's another extra rant on that question. I don't know whether that helps or not. In a weird sort of way, you guys all went through that crypto blow off top there. It went on and on and on and on and on and on and on. The key, of course, Luna Story's perfect example. Sjord found out about the idea at like 50 cents. And it went to like, what, $119? And unfortunately, Sjord, and he's young. He has to learn this. He just kept reinvesting. The project will never go away. It's the next best thing since sliced bread. Then the project collapsed, and of course now a good portion of his winnings have gone. And it's a lesson you got to learn. On the other hand, I missed the 50-cent bottom. I waited for a consolidation. In fact, actually, I could probably even show you the trade. Made good money. I ain't got nothing to complain about. I didn't lose any money on Luna. My partners, unfortunately, got hurt a bit, but that's here nor there. Maybe it was a dollar sign. I don't know. One of these. Oh, we'll try the number. Let's see what happens. Actually, it kind of looks like this is. Okay. Well, no. This must. Oh, actually, well, yeah. There you go. So I waited for this consolidation. So the market ran up off of 50 cents, but actually my picture's showing over that, isn't it? How can I do this? Can you see that now, hopefully? So Sjord got in here. It pulled back and I got in here. And then, of course, it starts going crazy and I just start spoon feeding. And I missed my last big order up at 125. I think I got some off in the 60s, though, so I don't think this is totally accurate. Oh, yeah. No? Oh, who's this? I don't know who this is. But the point being that if you force yourself, like an algorithm, to pay yourself as these darn things keep moving higher and higher and higher and higher, well, that is thinking like a bot. There are other people, of course, that say just keep buying more and buying more and buying more. This happens to be one sort of disastrous scenario, and it's too bad that it went this way. Good part about it is I think that there are some sort of rumblings that this thing might actually even still be alive. And people who actually own some of the other derivatives are actually, doing quite well. Like I think that A Cash is doing well right now. So anyway, the point being that part of being a bot and an algorithm sort of approach to all this is you're spoon feeding on the way up. And it's sometimes painful, to both sell and then watch the price go higher. And people talking about Lambos and stuff where I'm just running my portfolio and maybe I double my money, triple my money, which is pretty good. But, the 10Xs, we don't participate in those a lot because that's just too much anxiety for me. I'd rather just put myself on a nice sell half on a double plan and then just, basically, like I said, the bot algorithm side of me sort of takes over. Anyway. Okay, so I think I've beaten that question into the ground. What time is it? Still got lots of time. Okay, hi Brian. I'm a level 1 student. I have a question about the last Sunday session where we checked the yield curve. We saw the yield curve is inverted since September 22. Normally, 6 months after it inverts, the market is going into correction. This means it will be February, March 23. It's just a mess, because unfortunately, through these great resets, in 1940s, which was the similar reset, they actually, the U.S. government through the Second World War actually froze yield and froze the bond market. So that's how pretty crazy things can get through these great resets. You could argue that what's happened in Japan is heavy government intervention into the bond market. Like ridiculous, over the top, complete manipulation of the yield curve. So I would say that like through these great resets, things get really wonky. I don't know whether the sickness is tied into it. I have a funny feeling it is. It'd be interesting to go back in the 1820s and 18 teens. Of course, probably the 18 teens, that's sort of like your Napoleonic Wars. 19 teens, of course, that was sort of the end of the German Empire, I guess the Second Reich. I think that's how it worked. I heard somebody call the Second Reich for Germany was the 1871 to 1918 German Empire. But I don't know whether that's correct or not. Anyway, point being that, the end of that cycle, oh boy, did that ever go badly for Germany. I think the cycle before that was around 1700. And interesting, at that time, 1700, the King of Sweden actually ruled quite a bit of Europe. And that's actually, I think, where Russia and Sweden actually went to war. That was a famous war. I think that's actually when Peter the Great actually had his sort of heyday. Anyway, so the point being that once every 80 years or so, I think that we have to go through one of these great financial resets. I have a feeling that the wars are a function of the preceding generation finishing its entire life cycle, and that preceding generation was a demographic bubble. So we just had the baby boomers, who were a demographic bubble, finish their life cycle, basically now fully into retirement. The system, of course, completely lopsided. Many more people in retirement than working. Many more people demanding services, Social Security, Medicare, Medicaid, versus working and actually paying taxes into the system to pay for those benefits. I have a feeling that's sort of a reoccurring theme that happens around these events. So tragic, like my country, Canada. Now the scuttlebutt is that the government is making it easier for people to opt out and be able to commit suicide legally. Because, and there's one poor lady who has a fairly rare form of cancer, and the treatment cost of the cancer is so high that the Canadian government, the sort of opposition now is spinning it, that the Canadian government would prefer that she just decide to commit suicide versus having to pay for the medical bill. So that, I think that's an excellent anecdote of this sort of sign of our times. So as Julian suggests, man, you better take good care of yourself, because don't depend on the system to keep you alive, especially if you live in these quasi-socialist societies like Canada, that theoretically we have universal health care, but yeah, sure. Hey, try finding a doctor. Oh yeah, you got universal health care? Yeah, right, sure. Anyway, So, is the yield curve slightly screwy through here? Oh boy, sure is. Look at somebody even says, boring. Would you talk about the markets, please? Anyway, somebody's asking about the yield curve, and so that's why I was talking about this. I think to all intents and purposes, the yield curve is still inverted, if I'm not mistaken. So if that's the case, then really recession should be here. It should be knocking on our door. At some point, what I've actually suggested to people is this current market state of the U.S. Federal Reserve raising interest rates, and of course you saw the data out of the states recently, very strong consumer. Retail sales super strong, housing mortgage applications ticking back up. So they aren't anywhere near done. Not anywhere near done. In fact, I wouldn't even be surprised if this Fed rate has to go even higher. But you can see we're inverted and we've been here a while. I suppose you could argue there is flat, so there goes inversion. And there we are now. Notice, back in 2000. So normal, inverted, and then boom. And then through the George Bush days, and this was an interesting scenario where we did have sort of inversion warning signs over here. So there it went, then they were able to somehow sort of flatten things back out again. And then the market started to break in earnest, 2008 financial crisis, blah, blah, blah. So, the writing's on the walls. There is problems here. This isn't a healthy yield curve. And if anything, you can even see as we go further over time, the imbalance of financial institutions losing money. This is the definition of them losing money. So if you think about things like housing, if you think about things like insurance companies, they lend out on the long end and they collect the long end interest rate. They want to have a net neutral position, so they will borrow on the short end and pay that short end rate. And usually, especially if the Fed wants to stimulate the economy and make sure the economy grows, usually that is a positive relationship, and this is basically insurance companies, reinsurance companies, mortgage lenders, S&Ls, all those part of the financial services industry. This is them basically guaranteed to make money. This now, in this scenario, this is them guaranteed to lose money. And what is the definition of recession? Usually it's 2 negative quarters GDP growth back to back. In this scenario, and this has been going on now for a while, the financials of the market, the XLFs and all them, they should be losing money in this scenario. So my hunch is the Fed just keeps doing this until something breaks. And then as soon as something breaks, you can see the housing market. We were kind of up here, this is George Bush, inverted. Then as soon as we got up to up here, something broke. Yeah, Lehman Brothers. And actually interesting, it was in early 2007 when things really broke. And I actually got a sell signal when I was a broker. And I even have the blog post if you go back in the Wayback Machine. My sell signal on the S&P 500 came in March of 2007. So you could actually make the argument that actually the stock market told you to get out way, way, way before there was any sort of financial asset crisis. Sadly, the public only learns about the crisis at the very bottom. And of course, they sell into the bottom, panic dump, blah, blah, blah. And of course, all this is when all the companies go bankrupt, like Lehman and Bear Stearns and all that. So, writing's on the walls. And this is just really a question of when does the Fed actually cause something to break in the world economy. I don't know how long that is going to be. But the writing is definitely on the walls. Also, too, what I'd say is, especially people who are asking about, well, not that image. Find a lot of people in trading are looking for absolutes. And unfortunately, in trading and investing, it just does not work that way. It just doesn't work that way. So, ironically enough, you have to kind of ask yourself, what's the public doing right now? In a weird sort of way, if you look at things like crypto, crypto has an excellent leading indicator. Is crypto actually at new highs and is the public long? Or is crypto kind of at the bottom end of the range and it's just trying to get off its knees? I mean, there's the daily chart. Oh, yeah, it's so awesome. But keep in mind, there's your weekly chart. We haven't even, we're still in the reload long zone. If you ask the public what they're doing, and, everybody's got them in their family. I have 2 uncles that are really, really good at losing money. And when I talked to one of them the other day, he was like, oh, I bet you got really beat up in that crypto crash and all that kind of talk. And that is exactly what I would expect the public to be thinking down at the bottom of the market. So keep in mind, for this market to crash, you need to actually see prices at the top end of their range. Right? This market crashed at the top of the range. It looks to me, right? Remember Simon Dixon, if the price of Bitcoin corrects 80%, you should be in there buying it, not selling. You silly doofus. So how do you know that this market hasn't actually already corrected? It already is at the bottom end of the range. We can do the same logic on the QQQs. Mr. Gann would say that, well, you should expect at any given point in time a 50% retracement. Well, that's what that is. That looks like a W. Geez, that looks like a bullish divergence. So I actually think you might even see that even while the curve remains inverted, this kind of stuff just works its way right back up to the top end of the range. I could very easily see that. So, at the very least, we should probably, just on a seasonal basis, be thinking about 50% to the upside. So the NASDAQ itself is probably going to go after that high. And then, of course, if this thing tops out like any normal seasonal pattern, well, we're probably going to top out in reload zones. And, same sort of logic, Bitcoin loves to bottom 78.6 of the range. Usually these markets love to top out right around that 78.6. See, that happens so often. So could we see a scenario like this? Yeah. Also, what I would say too is the January barometer is a really good sort of tell of what sort of the institutional people. There are a lot of people that only buy in January because they buy at the beginning of the year. And I mean, look at this January, just straight up. I'm a bull, look out. So I don't know whether they're looking for a top here. Makes a lot of sense. If anything, what I've been saying to people is pullbacks are buying opportunities. So I would say on the NASDAQ tests of these lows, right, and did this even maybe do like a 61.8? I bet it did. Yeah. Good old mountain man right there like a boss. Ay. So, I might make an argument that there are institutional buyers coming in down here. There is it's not a recession, but there is your correction. You know where you're probably going to see the recession? And I've said this to you guys before. I don't think you see it in the United States, but I could definitely see it in something like Canada, a commodity country. So I could very easily see, and you can kind of see that, the NASDAQ doesn't look so toppy, but this Canadian market, that looks like it just ran into some sort of top there. Doosh. So, I've said this before. If Fed's going to keep raising rates, it probably won't break the U.S. market. But the market like Canada, oh boy, it could come down a long way. And so this is where you're probably going to see a recession. So anyway, that's my hunch. All right, so interesting question, right? And we should just keep an eye on this and how does this play out. My hunch is that if you saw the yield curve through the Paul Volcker years, that, same sort of thing, right? Interesting, out of the Fed down in the States, a dove, Bernard, I think her name was. I think it's a woman. I'm not positive. Bernard was a dove, and that person now left the Fed to go and work in the socialist Biden government. How ironic. So did that just tilt the Fed more towards the hawks or more towards raising interest rates? I'll tell you, all the data that I'm seeing coming out of the States, the U.S. economy is still uber strong, and it could easily handle higher interest rates. Could the market here tip over through this window? Yep, it could. I don't see it, but I definitely see pullbacks against those lows. We might go probe Mountain Man levels against there on the QQQs. The market that I think could get absolutely destroyed is things like Canada, Russia, Australia, South Africa. It's interesting. I'm hearing a lot of people talk about how much in love they are with the BRICS countries, and the potential for a BRICS currency to take over from the U.S. dollar, and that just makes me laugh. I find that so amusing, but that's crazy, Brian. Okay, so it is not really clear what we can expect and where we are in that spectacle. Okay. The past months, a few big American names, Amazon, Tesla, Microsoft, have already lost a lot of value, but is this just the beginning? I wouldn't be surprised if the inflation problem keeps stock prices relatively contained. Like a market like Canada could actually, looking at this chart, I like the idea of maybe even going and buying some put insurance in Canada. That to me doesn't look terrible, especially once we get into sort of April, May, sell in May and walk away. That's usually the end of the commodity cycle, and we start getting into sort of humming and hawing about the rest of the year looking like. But if I look at something like the Dow, good old blue chips. Smart rally off of the lows, that's for sure. This almost looks to me like top end of the range, bottom end of the range, and we're stuck in a range for the time being. That's about all I can really say there. A good technician would just simply say, look, do you have a short setup? I think Julian, he was hunting a bunch of short ideas. Could you make the argument that this is a short window? Yeah. Reload short zone. I don't really like the look of this top. It'd be interesting to see whether we have any divergences here. Yeah, I see a momentum coil. So nothing dramatic. But then compare that to like the XIU. I tell you, I love the idea of this Canadian. Yeah, look at that. Nice breakdown there in RSI. Look at Willie rolling over nicely. Look at this this MACD high. What is that? 0.26. This high here, 0.29. So we never did go to new highs. That is a potential divergence. Didn't really have any huge volume surge either on this move higher. So kind of tepid on the buy side on the volume. So as I said before, I like the idea of shorting, and I like the idea that the carnage is not going to be so much in the U.S. market. And because of that, the big U.S. media, they're not going to actually really bill this as that big of an economic wipeout. But I could very easily see, like, keep in mind, Canada got absolutely destroyed there in the early 1980s. We probably have a little bit of support against this trend line here. But if we start getting market structure below this trend line, then I know that, this is all open air here. And that probably happens this fall. That's usually when, they don't call it the fall for nothing. So probably something like back down against those lows, then up in the air, and then we find out whether this is like a head and shoulders. And then if we go through there, look out below. I could very easily see a scenario like that. So, all right. What I was just saying there with regard to the U.S. market is I think you're probably going to see more of a trading range sideways. Not the rip-roaring new bull markets going to new highs. But at the same time, too, the tech companies have already done their layoffs. So it's not like Amazon's going to go and fire a whole bunch more workers. They are unwinding. And keep in mind, these things were fluffy unicorns. Prices were ridiculously too high. And they've just basically cut them all back down to earth. So the bull market that was, if you look at that Facebook, perfect example, up here a couple of years ago, this was looking pretty stupid. September 2001, you look like a doofus stepping in on the long side there. Boom. And now AMZN, same sort of thing. The bull markets are getting taken care of, right? This was stupid idiot unicorns, and boom. Remember, this was like $3,000 a share up here. Who the fuck's going to buy $3,000 stock? Oh, I know. We'll do fractional share purchases for the public. We'll get them to buy it. All right. Yeah, I'm going to buy 1/10 of a share of Amazon. That's a good idea. How much of a voting right do you get on that? Not much. And then boom, bring the price back down, split the stocks, and now it's back to sort of quote-unquote normal. I mean, you could actually make the argument that Amazon is actually probably back into a buying window against all these lows here. And, it'd be interesting to look at what Bezos is doing. I wouldn't be surprised if he's buying his stock back. I think Tesla did the same thing. Unicorn up here, way too frothy. And look at this. This is what pisses me off. At any time, Alan has done this 2 or 3 times, and nobody calls him out for this, which makes me so angry. Did at $400 a share, and that was, before all the splits and stuff. Did he tell anybody, probably buying a Tesla stock's not such a good idea right now? And the stock got cut almost by 75%. Remember what Simon Dixon said about 80% haircuts in Bitcoin price? Well, same logic here. It's same shit, different pile. So could you make the argument that they are unwinding this stupid idiot blow-off top bull? Yep. Have they unwound this stupid idiot blow-off top bull in Doge? Well, I don't know whether you've been watching the name. I mean, this was that idiot sort of unicorn, fluffy. It was just the stupidest stimmy check economy. I mean, same thing as Mr. Dixon says. Has that corrected 70-80% of this previous move? If it has, and you still believe in Alan, why aren't you in there buying this thing? Not selling, buying. So, anyway, okay, enough ranting. Then I start talking about Alan and I get all triggered. Okay, I remember you, Brian, said that a bear market takes about 18 months from the top. So there's a good analogy. So how long has this been? We are now, let's change this to a monthly chart. So 18 months is our typical bear. We are now, oh, interesting. Hello. Can somebody tell me? If a typical bear market is 18 months, are we overdue? How do we do this? Over here. Have we gone the typical 18 months? Anyone? That's right. They're like Nicolas, my uncle was teasing me, oh, you must have gotten destroyed in crypto. So clearly the public is not bullish whatsoever. Anybody over there on YouTube? Have we gone the required 18 months to clean up the previous bear? Or I guess clean up the previous bull? Do a bear? That means that this thing stopped being a bear right there. 18 bars, 18 months. Looks like Willie's stupidly oversold. You know, my phone as a broker would be ringing off the hook. Oh, I think we should sell. We should sell. We should get out. It's terrible. So, interesting that whoever posted this question. You know, you're right. You're absolutely right. So, the previous bear's done. So if we look at the all-time highs in stocks, we see that most of them have peaked a year before the reversal in the yield curve. So in that case, around February, March 2000, we will be 18 months after the all-time highs. This is a bit contrarian. Well, what I would say is that the yield curve is acting very wonky right now. And what scares me, of course, is that we are going through the Great Reset. So you have to ask yourself, is the economy so strong? Because keep in mind, taking interest rates to zero and increasing the money supply by like tens of trillions of dollars, this has created the absolute perfect storm for inflation. And frankly speaking, these central planners completely fucked this up. So is it going to take maybe 5-10 years to fix this problem? It might. This isn't a problem that's going away tomorrow. And of course, if you are on the site and you are active and asking questions, then you know about Cole's warning for us 2026, 2027. Could this inverted yield curve actually go on right through into that event, and then finally the damn wheels of the bus start to fall off and all hell starts to break loose? Yep, you could easily see that. And remember, in 1987, which is another one of these 40-year cycles, of course, there was a big stock market crash. And then in 1947, right, that's when we had that massive inflationary spike, and the stock market came off through that. So it's going to be a bumpy few years here, folks. Don't kid yourself. And this is messier than mess. Do I see the stock market going to new highs? No. Do I see Bitcoin going to new highs? No. I think this is going to take probably a year or two of, 2023 is your basing year. And that's, remember I had that image up earlier. That's this. The funny thing is, though, just Bitcoin rallying back to things like 38.2s, which you should expect at any given moment in time. Any place, anywhere, this is what markets do. So 38.2 of this range is right there, $35,000, $36,000. At any given point in time, that's what you should expect. Notice this particular cycle, still in the bear, not a bull yet whatsoever. You can see this move actually worked its way all the way up to 61.8. I'm not here going to say, the market is going to go here. The market is going to go there. You can see this went straight up right into that 61.8. But then once that was done, we had to go straight back down, all the way right back down to the lows. Right? All the way right back down. I mean, if anything, we probably don't want this kind of scenario. This volatility is gut-wrenching. So if I would prefer that we just settle down here, please. Just calm down. Everybody get a level head. All right? I would like to see this kind of action. Set a nice base so that coming out of 23, 24, 25, 26, and that's all this conversation, we can go have funny money in the build out of the crypto industry in our society. That's what I'd like to see. So if anything, I don't want this stock market to go booming to new highs. I want your scenario where we probably are going to run into some selling here relatively shortly as the Fed continues talking about raising interest rates. And people in the broader economy moan and groan about, layoffs at Amazon, layoffs at Microsoft, and all the sort of fluffy unicorn stocks and stories of that, nutso MMT world all get unwound. All right, so I don't know. That's my 2 cents. We're going to, let me know whether that answers your question. If it doesn't, we can always circle around and try again. Is this going to be easy? No, never is. If there are any crises in the world, are these crises going to be the most, the worst, the ugliest, the most disastrous, the worst possible financial crisis ever? Absolutely guaranteed. That's the way the damn media works. Is every single time there's a crisis, this is always the worst crisis. Oh no, this is way, way worse than the last crisis. And then you look back after the fact and it's just all bullshit. My hunch is it's going to play out exactly the same way as it almost always has recently, where, unless, of course, a lot of us in the public start talking about it. If us in the public start talking about it, then no, it won't play out this way. But my hunch is that the quote-unquote crisis is going to be all around the Republican Party not voluntarily raising the debt ceiling limit for every U.S. taxpayer, which is basically the cornerstone of the entire fiat currency system. And then ultimately, stock prices start breaking. The media starts blaming the Republican Party for all of the bad times and economic woes, and it's all their red party fault. And they ultimately say, well, we're not the bad guy. Okay, fine, we'll raise the debt ceiling, blah, blah, blah. And the whole damn thing starts again. Anyway. I know there is a tolerance of data, and it's not easy as 1 + 1 = 2, but I got lost in where we are at the moment. Hey, in these great reset decades, it's very easily able to get lost. And frankly speaking, we are in the exact part of the cycle where we have the very real possibility that all of these societies completely switch from capitalist societies into what are called command economies. It's what happened through the Second World War. Most of the stock market just turned itself off. Most of the capitalists went into the business for just bidding government contracts to supply the war effort through World War II. But basically, capitalism kind of ceased. Could we be heading into that kind of scenario here? Maybe. As I said, don't get into the business of predicting the future. If you're here to make money from trading, okay, well, find a setup that you like. Find your 3 unrelated reasons to justify you acting. Make sure that when you're right, you're paid more than when you're wrong. Ideally, you'd like that to be a good 2 to 1. And try to make sure that algorithm that you're employing is accurate 60-70% of the time. Doesn't have to be 100% of the time. And in fact, you will never be 100% right. Just doesn't happen. So just be prepared that when you're wrong, you have to hop off. And then just don't take too much risk on any one bet. And then that way you don't really care what the hell the future holds. You're just riding the wave. And the business of predicting what's going to happen is irrelevant. The only thing that really matters is if you're long, then you're buying against lows. You're selling against highs. I mean, how many people there 6-8 months ago heeded my warning that you better have your shit together and get ready for this coming bull? I don't think anybody in the public did. In fact, most people just kind of snickered and laughed. I would make the argument that it's the same thing. Same poop, different pile. Now, don't chase. For God's sakes, don't chase. Wait patiently for the technical pullbacks. And as I said, I think your next buying window is probably somewhere around my birthday. So, slow and steady wins a race. Look at this dent. Oh boy, there goes another one. Dun, 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 dun. Not sure why. I think probably because I keep talking about it, they don't want to launch the lit. But and it's always funny how even in a bear, if this thing all rolls over and Bitcoin starts heading lower again, it's remarkable how there's always a bull somewhere. So okay, that's about 5 minutes to the top of the hour. You got a whole bunch of political rhetoric in there. I didn't get too uppity about things like substitute drama teachers. So hopefully you got some value out of that. Talked a little bit about Bitcoin there, the first part of the broadcast. As I said there a moment ago, I don't really see anything specifically changing here. In fact, it looks like we're firming up here a little bit. Anybody who did buy off the bottom, you should have already banged out at least a nice 2-to-1 partial profit. So market's doing what it normally does. If you're trading algorithms, I like the idea that the algorithm has us long right now, so it's just slow and steady wins the race. It's fascinating if you're trading manual setups, things like the bot. We're still technically making higher highs and higher lows. It looks to me like they're just effing around with the public here. Keep in mind, it is the weekend. So a lot of the adults are not here right now. And if anything, the Asians that like KuCoin right now, oh my goodness. The kids playing on KuCoin right now, it's crazy the amount of money they're making. So they're all sleeping right now. It's I suppose the ball's in the Europeans. Europeans, especially with the energy prices that they're enjoying, we'll say, right now, thank you, Mr. Putin, and all the sort of insanity around Europe right now. I don't think that they're really that active in the speculative part of the market. So if anything, you could make an argument that as soon as the Asians went to sleep, the bid fell away from the market. I suppose if we start rolling over lower highs and lower lows defines a bear. Still think we're making higher highs and higher lows. Now that we have gone through this trend line, I'm not even quite sure. I just drew it off of this little low here. That's not even probably even relevant. Probably a trend line like this off of that low and that. Yeah, I mean, interesting how the bot, it's going to find some interesting company. If we do puke out here, we're probably going to head down into this bottoming area. We say wicks and tails like to be eaten. Hell, you could probably, if you wanted to try and sneak in on the long side here, I might even think something like A to B, wherever that lowest low is, C to D, and then see if that level lines up with a reload zone. So, and if anything, I saw Colin, he was tweeting images out kind of like this, where he kind of thought we'd see a pullback into reload zones and then a bottom and then back up. I could very easily see that. It might be interesting to see what it does to the algo. Does the algo get forced to hop off? I'm just simply, taking the trades as the algo comes in. But interesting enough, because stop to scratch wasn't hit on this, if this scenario played out and we held these lows, it would just be a big hurry up and do nothing. I would just be sitting there underwater on the setup. And interesting, too, how really all this is going to do, if this scenario plays out, is just put in another bottom against the original double bottom that I actually think is the entry for this trade. So it's just a big hurry up and do nothing. And now, look at what they've done. And this is so typical of Bitcoin and crypto. Did they just jazz a whole bunch of the kids into panicking and dumping into that low to make one big-ass hammer? If we actually trade up through this high now, that actually becomes a short-term buy signal. So, go figure, eh? Drive the kids crazy. You might find that this is like a little bull A, B, C, D, and it does something like this. So, we see candle body highs for trade location. We see reload short zone. So I can see, and we had this fun little trend line we just drew off of the lower time frames, but notice, look how that will all line up somewhere here. So if we go down to 10-minute chart something, There is the double bottom that they're trying to put in here. Very sloppy, very ugly. But what I could see here, of course this would break all the kids' hearts, is move up there into that level. So megaphone. But because this is a lower low, megaphone goes like that. See how that's a lower slope? So I might suggest that your trading range for the time being is actually all through there. So I'll leave that on the screen. Gonna go do Liam now. So I love it when I ask all you guys for the best wishes when I go out and live the world of autism. It really helps me a lot, and I noticed last Thursday I wasn't able to get one in because we didn't have Ben on the call, and Ben almost religiously remembers to wish me luck with Liam. So I missed that last week, and last Thursday Liam was in a very, very peculiar mood. So please extend some best wishes for Liam and I. And we'll come back, and I won't even touch this. I'll update this when I get back from Liam on the site, and we'll talk a little bit about this tomorrow. Keep in mind, tomorrow is a holiday, so regular stock market kind of conversations, they'll be on hold. So we still have another day of probably some shenanigans ahead of us. And then we'll sort of see where the heck this thing really wants to go. But in the short term, I kind of like that thinking, you know. I kind of also like, it'd be interesting, the harmonicans on this site. Does this actually paint a potential harmonic? Maybe even something up in there. That is 31.9, so that's awfully close. Well, yeah, that's a bit iffy. But anyway, we'll have that conversation when I get back tonight. Okay, why don't we leave it at that? PMA for the win. Thank you very much, Andrew. Appreciate the kind wishes. Thank you very much, DBG. Hope you guys got some value out of that. Slow and steady wins the race. And I answered a few of those questions that were posed there. So, all right. PMA for the win. I'll see everybody later. Wish us luck on the road. All the best. The only thing left for everyone to say is bye for now.